Hello to all of you. I'm Abdullahi. I have experience in trading for 11 years in international markets, and I welcome you to all my good friends that are in the third term right now. So today, in this session, we want to talk about the indicators. What is indicators? They're tools, analyzing tools that whichever you choose, it will be activated on your chart, and they will show and announce the entry and exit points of your orders. Indicators usually have a lot of errors, and mostly the professional traders don't use them. I myself don't use analyzing indicators because some of them are analyzers and some of them just show your Fibonacci's and pivots and others and tell you what's the entry point precisely. But they're with a delay. The best trader, the best analyzer is who have the best entry or exit point in the chart. So it won't go to the negative. But indicators, if there's an uptrend or a downtrend in the chart, when it goes 2 out of 3 of the chart, they just say that this is a risky zone or this is the exit zone. But I myself, I have some indicators that I use a lot. Not analyzer ones. They're the indicators that show my pivots, draws my Fibonacci automatically, and I will suggest them to you some other indicators. I've copied and pasted for you. It's in your CD files. And this indicator is called T2 and T3. It's 80% precise in announcing the entry and exit points. But this indicator also have errors. There's something that I always say is that the best analyzer in the market is the one who analyzes himself and can get the price of the market himself. Can put his TP or stop losses himself. Usually, the trader himself can go further from the market than the indicator. Indicators can't works with the past of the chart. That's why it has delay, because it's analyzing everything in the past and the present. The important indicators, I'll tell you, some of them are not really suitable and they don't really get used. I have get rid of them in this part of teaching, and then I will teach you other things. For choosing indicator, you can go to the toolbar, this plus like thing that is green, click on it. You have some indicators here. It shows you the indicators. Some of them like some of the indicators tell you the size of the trade or how powerful is the seller or the buyer. Usually each indicator has its own like use. The first indicator is trend. When you open the trend bar, it shows you the indicators related to trend. One of the that I use is bonds. I will tell you the default mode, and then we will have a session to tell you the techniques in the indicator. Okay. Okay. This Bollinger bonds is created from moving averages. We call these a moving averages. Each one of them announce a message to you. These three lines that is on my chart have a particular rule for it. Like this one that is swinging under your candles, one line is swinging above your candles and one is in the center. That is in the middle of these two walls. There's something like a channel here. When my trend is downtrend, these three lines change shape. Like there's a really intense drop. If you want to recreate it, you see that my trend was uptrend and one part of the chart is sideways, and I expect it to get out of this sideways, intensely go up or down. These two bottom lines, because it was a downtrend, I tell you these two bottom lines first. These two bottom lines are in like downwards, but the line above it is a little like upwards. And here it is giving you a warning that the price is going to drop intensely. Means that price is not stuck between resistance and support anymore, and it's going to drop down. These two lines that I have, one is the middle line and one is the floor line. These two lines go downwards, and the line above it are like flat a little, and it will go to the opposite direction for a little. We have its examples in the chart a lot. Like here, my chart was sideways. My chart was relaxing after a lot of swings. And here that my chart is not sideways anymore. It has gone, these two bottom lines has gone down, and the one on the above have gone up a little on the opposite direction and gone down intensely. Now I want to explain to you in the present of this market. Here my trend has gone down, and here is sideways, is relaxing, and these two bottom lines are like going upwards. and my line above is going down. When these two lines are like the the beginning of the lines are towards each other, the cap line or the floor line are like towards each other, it shows that your price is still sideways. And the middle line is the same as always. It's normal. Yeah, but it has gone up a little, but it's not important. When can we say that it's been like changing is that when it's completely changed the shape. Okay. Now the rule that we have is how can we start trading, selling and buying with these indicators and tools? If we want to buy, the rule 1, the two lines should be like in the direction of it would be upwards. At least 50% of my first candle should be above my central line. I'm repeating. It's really important. So many use indicators and just know one rule and do it trade by it. And out of 10 trades, they get profit from 2 or 3 of them, and the rest of them go into losses. But they would say this indicator is really popular, but we couldn't get profit from it. That's because you should know the rules. So whenever two lines go like are towards each other, the chart is sideways, so you shouldn't trade. In a sideways chart, you should not trade. And if you do, you should do it with really low sizes. Like the least size that you can trade in. When you want to buy, like I want to open a buy position here. Here is buy. Let me mark it up. Here. In this zone. If I want to do a buy position here, I wait for my two lines to go upwards, exactly in here. I wanted to do a buy position in this candle. Like this line is upwards, but this line is upwards as well. And I told you, at least 50% of the candle should be above the middle line. And if you want to trade, at the most should be 2 candles above the middle line. And when you're like trading right now, you see, where do I put my TP? See, I did buy here. And when it hits my bonds line, I should put my TP and exit. And another thing, when you want to sell, do a sell order. I can wait. My 3 lines be in the same direction and is downwards, like the first line downwards, the middle line downwards, and the floor line downwards as well. For a good trade, for a good position without risking, you should wait for 2 candles to finish under the middle line, like here. Like these 3 lines is flat, so my chart is sideways. Here my candle is like under the middle line. It's giving me a confirmation that my trend line is going to go down. But what do I say? I say that I need more confirmations. Like other confirmations as well. I should wait here for my bottom line to go down, for the middle line to go down, and my above line to go to the opposite direction. And then drops intensely. Okay. For your sell order, you can put your targets in another way. Whenever until the time that your candles are like under the middle line, when it gets out, you have sell positions. When it gets out, you should close your sell positions. When it's above the middle line, I have buy positions, and until the time that it goes under the line again. My price has gone up, my candle is above the middle line. It's like it has hit the wall of Bringer's bonds, and it's gone up again. There's an analysis in this called candlestick, and just pay attention to this because it's really important. Because it will be used until the end of the chart that you're analyzing. And it's one of the most important and most powerful analysis in the world, this candlestick. And I think that is true. I'm trading for 7 or 8 years according to candlestick now. Now, okay, don't go out of the topic. If I want to do a buy position here, I can put my stop loss where the price has finished, and when the wall above the chart is like swinging, I can say that I have buy positions. I can like use my indicators like Fibonacci and have like my targets according to my Fibonacci precisely. There was a minor Fibonacci here, and our more major Fibonacci would be this. I said that it should go to 38, and it has hit it and came down again. You should use other tools among the indicators, like trendline and Fibonacci and other things. Okay. This is one indicator. The next indicator, we go to the trend part. Envelopes. It's not really important. It's not really good for usage. I told you I will tell you the important indicators. I will not teach Ichimoku right now. One of my favorite, like one of my favorite indicators, and I will use it in everything. Like in every chart, there's an Ichimoku. This cloud-like thing that you just see, we call it Ichimoku, the analyzer cloud. Like all the charts that I trade in have this Ichimoku. I use it. So I will not explain about it right now because you will be confused. It will be one of the last topics that you will learn. The other thing is moving average, the middle line. It is also called moving average. It may be really like simple if you see it at first, but you can see it works really well. And it has really simple rules, and you can, according to it, trade with it. When the trend changes, my moving average tells me and announces it. Okay. Let me explain to you the default mode of moving average and then I tell you the techniques. Okay. The rule of moving average is when my candles, at least 2 candles, is finished under my moving average, means the third one has started working. I can do a sell position until the time that my trend line is swinging under my moving average. And for my uptrend, when there's 2 candles above this moving average gets finished, I can do buy positions until the time that it is above my moving average. The rule 2, that so many people have errors in it. When your candles are on your moving average, you can't decide about them. It's usually gets shown in the sideways part of the market. The candles that is getting formed is not counted. When it gets finished, you can do sell positions until your candles are under the moving average. And for buying, when 2 of your candles gets finished above the moving average, you can buy until the time that it's not under the moving average again. Like this is on the candle, so there's no bearish signal or down signal. It's just giving me a warning that the trend may drop down and be a downtrend. And another thing is this candle. This candle, like 90% of it is finished under the middle line. And the third line has started working under the line. And in the fourth and fifth candles, they started working above the middle line. These indicators have a really bad thing about them, that they have delay. I do my Fibonacci. Whenever I use indicators, I use Fibonacci as well. These are on my 23 Fibonacci, and I cannot trade. When can you trade is that your 38 of Fibonacci breaks. It has gone up this candle and gone down again. And then, I'm sorry, this mouse is a little, yeah, I should get a mouse tomorrow. So I erase my Fibonacci. This indicator, you can change its numbers. You can change its time period. I can change the 14 days to 9. I don't remember the numbers of moving average right now, but I will check it. Okay. It will change again. Okay. I want my indicator to go a little further from than my chart. One thing that is bad about indicators is that they're far behind the chart. I put it 10, and then this is 5. So this part, yeah, it's better now. Whoever, whichever trader put different numbers. Like right now, I put 9 and 5. Some traders don't like it. Put it on 12 and 2. It's by your own liking. You can do it whatever you want. Whichever that you're more simpler for you, it's better. It's important that it sets with your trading strategies. Okay, let me change the color of my indicator. I want to tell you a technique in this part. We choose the moving average again with another line, with another color. But I should change the numbers right now. Okay. It was on the line. I put the numbers. What was the last one? 10 and 5. I put this one 8. And then put 8 and 6. Okay. You see, it's really close to each other. I put this. I've forgotten the numbers. I'm sorry. I don't work with indicators for a long time now. So I have forgotten the numbers. It's something in the benefit of you that I'm remembering these, and you will learn. I can make a technique on this, and it has a rule. A rule that makes you sell surely and safely is that these two lines cross each other. Like the blue and the yellow line cross each other. It's coming from up to under the second moving average. When it does something like this, my sell position is confirmed. And my trend is going to be downtrend. And another cross has been created here. And my blue line is coming from under the yellow line to the up. And it means that you should be sure that 2 candles are above the line. It goes down again, and then it goes up again. You see, that's exactly what has happened. This blue line has gone up. The 2 candles has been finished above it. And my uptrend has been confirmed, and it has gone up. What I put on my yellow line was 17 and 6. When it breaks, when it you can say when it breaks the blue line, you can say that you can put your target on the wall of this yellow moving average. So I've told you 3 rules here. Always remember them. The analysis that I tell you, always remember them and trade according to them. So you'll be learning it. Like here, the president of the market. Now I want to, all the things that I said was about the past of the market. What I'm saying is about the present of the market now. The blue line is going down and it's on the yellow line, and it has announced that the trend may go down a little and then goes up. Another rule that it is I forgotten, this is really important. When the 2 lines are on each other and they're really close to each other, you should not trade because your chart is sideways in that way. Especially here, they're on each other and are moving in the same direction. Like they're not getting further from each other. When they get further from each other, you can do the minor Fibonacci here and get your profit and close it. It had like hit 61 right now. It will go to 78, and then again it will go up. Okay. For this session, because indicators topic is really like consumes time, I hope that I explained well. And I try not to say it like the things in the book. In my own classes that are in person, I usually talk not like in the books. Why? Because I want you to know that I don't want to, like, anyone in this market can't be like a master. I haven't read any books until now, and whatever that I learned was by experience, and I have lost so many things because of this experience. And I just want to give this experience to you and stick to the rules. And I think that you will be a professional in the future, that you won't need the things that I say today. Okay? It's the end of the class. Practice these that I told you. So there won't be anything not clear for you.